All right, something that I always get asked on my Discord server, as well as just people in general, they just keep asking, commenting about it, is how do you figure out what the daily bias is, and how do you figure out what's it called? Like, just how do you do a top-down analysis? So, what I usually do is I start off on the day, right? Oh, I don't even know why it's doing that. But I start off on the daily candle. Um, there's nothing really of noting here. The only thing that we could say is that there is like an order block right there. So that's just telling us that most likely we'll continue going short, right? Or we'll go short off like for today. So yeah, there's an order block there, and we hop onto the 4 hours. Um, this right over here. So the only thing that's really of interest to us right now is probably from this candle to 9, right? It's because I didn't take a trade. I forgot to mention this. I didn't take a trade because I didn't see my setup properly, or just my setup didn't happen. But I did anticipate this short, and I'll tell you exactly why. So one thing I noticed is we were within the fair value gap, like the 4 hour fair value gap, and if we hopped onto the 1 hour, other than this order block, we had these buy side liquidity, right? So what I was assuming is that price would have went up a bit, and the reason why I would have went up is because again we were in a 4 hour fair value gap. I thought the price would have went up and then swept a high, right? So technically you could say it did sweep this high, but I'll show you why I didn't enter. So you could technically say, yeah, I did sweep this high, but again, I'll show you why I didn't enter. So we hop onto the 15 minutes. um, we again had this crazy move up, and we were about as short, right? That was just the thing. I could have actually entered this short here. I didn't see the setup. I was waiting for something else. I was so tunnel vision on something. I could have just placed this down here, and then down to there. This is just a quick like analysis. But yeah, so you zoom in, and then we zoom in again, right? So now we're on the 50 minutes. What do we see? So we see that there's a fair value gap right here that got inversed. This again will tell us that we are going short. Um, we also see that there is a 9:30. Let's hop onto the 5 minutes because it's easier to show. So New York Open created a high, and what I was assuming was gonna happen is because price was so choppy on this liquidity sweep. Price was just super freaking choppy, right? Do you see how it's going up, down, up, down, up, down, whatever? So because price was this choppy, what I thought was gonna occur is price would have moved up a bit because again we were in a fair value gap, we were respecting it. I assume that price would have went up to sweep the open, and then I don't know why it keeps doing that. Sweep the open and then continue going down. So I patiently waited for the sweep. However, it did not occur. We edged my entry by like just a tiny bit, and yeah, it ended up shorting. Um, again, boom. You have to just, the only thing you really have to do is just mark out fair value gaps and inverse fair value gaps and liquidity sweeps. If you want to, you can also mark out order blocks, because I could have what's called traded off this order block right here. I could have traded off that order block right there, and I could have gotten a short, but I was doing this on my phone during class and I had to hide the phone, so I couldn't really see this. But yeah, this was a very good entry, A plus setup. I didn't take it. I should have taken it. Next time I will. But again, let's recap. You start off from the daily fair value gap. It keeps like freaking doing this, bro. Start off with the daily fair value gap. Mark out what is of interest to us, right? So we see that there's an order block, first of all. That is of interest. There's an order block. Zoom in to the 4 hours. You zoom into the 4 hours. You see, is there any fair value gaps that we're within? Is there anything of interest, right? Is there any liquidity sweeps? See, in this case, we swept liquidity, and we're also within a fair value gap. So from this, I can have a little more, I could lean a little more to it going up a bit, right? So it going up a bit, probably touching into this fair value gap, this BPR, and then going down, right? That's something that could possibly happen. Now we zoom into the 1 hour, right? So on the 1 hour, again, we mark out these highs. There's liquidity that's being swept. It's being swept. Yeah, there's no way else to put it. So, and why did I again? Oh, I forgot to tell you guys. Why did I wait for this to long and take out these buy side liquidities, right? Why did I wait for it to long and take out this buy side liquidity? Well, again, let's take a better look at the charts. If you're not an experienced trader, you might not see this, but this is a market maker model. So this is in fact, this is a market maker buy model. So we see that not only are we within a 4-hour fair value gap, we are also within a 15-minute fair value gap. We also have a market maker model, right? There's probably an SMT here. I'm just too lazy to check. We also have a market maker model, which means that we are going to long to these liquidity, these buy side liquidity. We did actually sweep it, and then we hop onto the 5 minutes. I just didn't like how weird it was on this 5 minute. I didn't like how it was bouncing up and down. Frick, bro, I keep trying to exit so it doesn't like thing. But yeah, I didn't like how we were bouncing up and down and hovering around this liquidity. So I just waited for this 1 hour. The market open, New York market open, to be swept, because once it was swept, that would have been a clean A+ setup. But what happened is we didn't end up sweeping, and I guess someone could argue, or one could argue, that we actually shorted because we were within a 5-minute order block. Plus we inversed the fair value gap, created a fair value gap, inversed a bunch more fair value gaps, did a change state and delivery from the liquidity sweep. You can also zoom out to the 1 minute. Let's see what happens on the 1 minute. So on the 1 minute, we have a change state and delivery like right about here. You could enter short. You can enter short from this. Place the stop loss on top of a fair value gap, or you can even do this if you're not trying to have it as tight. So we zoom in again. We expand it real quick. So yeah, you can place it down right there, or even again right here, but we'll keep it here for now. And how do you find your take profit? You take your Fibonacci sequence, go from the top of the sweep move to the change state and delivery, standard deviation, target -2.5, or so you target your -2.5 and have runners to -4. So basically, this would be your -2 would be you could have -2 as your TP1. -2.5, just de-escalate. So you slowly de-escalate, and then this as your final TP. Or what I do usually is I have it at -1.5. As soon as it touches -1.5, I bring stop loss down to break even, and then I let price just like it's like a risk-free trade at this point. So if you guys did enjoy this video and you gained knowledge from it in any sense, you enjoyed this, smash the subscribe button, smash the like button, and I also hope you could join the Discord, link in bio. It's completely free. We were actually talking about this trade there. That's where somebody asked me if I could make a video about this. So yeah, see you guys in the next one.